A very good afternoon, everyone. A very warm welcome to all the distinguished speakers and participants in today's webinar, which is based on the topic Budget 2024, Key Changes Proposed in GST and Customs. Today's webinar is being organized by DGTS Delhi Zonal Unit and Kolkata Zonal Unit. I am Ravindra Joshi, Additional Director, DGTS Delhi Zonal Unit, and I will be the moderator for today's session. At the onset of the webinar, I would like to invite our respected ADG Sahab, Shri Amish Kumar Gupta, who is an IRS officer of the 2002 batch and is currently serving the department as Additional Director General, DGTS, DZEDU, and holding the charge of KZEDU as well. Sir has a dynamic personality and has a vast experience of serving in various formations in Delhi, NCR, Gujarat. Sir has also worked in board office and has in almost all the areas of department, which are excise, customs, and GST. Sir, kindly, I would like to invite you for a few words on the topic, sir.
Thank you, Ravindra. A warm welcome to all the people, all the delegates of the webinar. Special welcome to our kind of chief guest and keynote addressee, Mr. Shravan Kumar, who is the Chief Commissioner of Kolkata Zone. As you all know, in last few webinars, he has been addressing us in form of keynote address, and we all know that he has worked in all the areas of the department, and he's a very keen. He's always very keen to address the issues regarding traders and the entrepreneurs. And in the same light, every time he agrees to, whenever he's at a short notice also, to address the webinar. I also welcome Shri Sushil Poddar. This first time we have made Mr. Sushil Poddar as a trade partner. He's the president of Confederation of West Bengal Trade Association. So on behalf of this August gathering, I welcome Mr. Poddar also. The presentation obviously is being given by Mr. Vikas Parekh, as all would have seen. He's a chartered accountant, is guest faculty at NASA in Kolkata. Last time he was the panelist in a webinar. This time he has taken the mantle himself to educate the people on these topics. Coming to the topic of this budget 2024, last few webinars were more of a kind of refurbishing our old knowledge and the different issues the department and the SSC faces. Those type of things were being taken, and it was more of an educational thing. This time, after the budget, the board as well as the department has a view that the budget comes and a lot of different changes come in, and many of these notifications things come into newspapers also. But it is quite a necessity that these whatever changes are there, they need to be properly disseminated among the clients of the department, which is the SSC. In budget this time in budget 2024, not many changes have been done in customs and on customs side. Different changes in tariffs and all have been done, which obviously Mr. Vikas Parekh would delineate on that. But as regards the GST, lot of different things, a lot of different changes have come into being. One important thing being the amnesty provisions has come this time. So as we all know that a lot of years have passed by in GST. Initially, the GST was brought in at very short notice, and the GST being a new law, it takes time to solidify. So a lot of different return filings and dates and all, many people were not able to keep track of that. And because of that, many of them have missed out something and some other things. All those things, time to time, have been taken by the GST Council. And every time these things are discussed, this time a lot of things have been addressed. A lot of different issues have been addressed, which will help the SSC. I like Mr. Vikas Parekh to properly evaluate these, properly tell about these provisions, because there were quite a lot of them are beneficial to the SSC. As regards the there are some different changes in law also, and then provisions of appeal also. The time of filing, the time of time of issuance of orders, issuance of show cause notice, things have been changed. The time limits have been increased. So I would request the people in the forum here to listen properly and quite in detail to these. Presentation will be available after the webinar, but please go through in detail and uh, please disseminate this information among your friend and brethren also, so that a wider reach is done. Thank you again, and thank you, Ravinder, for giving me this opportunity. Thank you. Can't hear you, Ravinder.
Thank you so much, sir. Thank you for your kind words. And now again, I'm very happy to share today that again we have Shri Shravan Kumar sir, who is an IRS officer of 1991 batch, and sir is currently serving as Chief Commissioner of CGST in Central Excise, Kolkata Zone. Sir has started his career as Assistant Commissioner in Raipur Commissionerate, and thereafter sir has served at various places throughout the length and breadth of the country. Sir has served on various positions like vigilance, DGTI, DRI. The areas of expertise of Sir are intelligence and investigation, intellectual property rights, and vigilance matters. Sir is again a recipient of Presidential Award for Specially Distinguished Services in 2010. Sir is a very avid reader, particularly on history, science, religion, literature, and Sir is also a very good lawn tennis player. And thank you again, sir, for within such as ADG sir has also mentioned that sir comes to our rescue whenever it is required. So thank you again, sir. Kindly enlighten us with a few words of wisdom, sir.
Thank you, Ravindra. It's always my pleasure to be part of any discussion where we try to disseminate in knowledge and share it, and try to basically share with an objective to make it available to more and more people, and the introductory sessions where questions are asked, and the whole objective is that the areas of doubt are removed, and I like to be participant in such activities. So Shri Amish and Shri Ravindra Joshi, thank you for giving me this opportunity once again. Shri Shoshil Poddarji, Vikas Parakji. Quite a few days have passed since budget was presented in the parliament. By now, I think many of us have seen broadly what is there in the budget. I'm sure Vikas Parekji would like to take the participants through all of those changes relating to indirect taxes of customs and GST. A few things I would like to mention briefly. On customs, there are a couple of key changes. One is regarding certificate of origin, which has been a bone of contention, and there have been a lot of issues and show cause notices where till now the requirement was that the certificate of origin should be from the competent authority of the country from where the goods are being imported. Now the government, the budget proposes that that certificate of origin should be replaced by proof of origin, where it is being broad-based in alignment with the trade agreements, so that other than the authorities which are required to give the certificate of origin, even the exporter or some other person based on self-declarations and other documents, they can provide a proof of origin of goods coming from that particular country. That is one significant change coming on the customs side. The other changes are relating to rates of duties with an objective to promote make in India in couple of industries. I can mention is the marine industry or leather and textile industries, where the rates on the raw materials, etc., are being reduced just to promote these industries. On the GST side, Otherwise, overall objective of the budget has been, as far as it relates to indirect taxes, is to simplify and rationalize things, and also streamline the dispute resolution mechanism of the department, and with that bring ease of doing business. I will mention 3-4 changes of the GST briefly. I know Vikas will take the participants through these changes in detail. So first change is, I would mention, is the section 11A. Now, this new section 11A is coming to take care of situations where there has been a practice in the trade and industry where tax was being paid at a particular rate or not being paid at all across the industry. And later on, somebody points out that there is a technical issue and actually there should have been a higher rate of tax on this. So the government with this section 11A can regularize all such payment, and this avoidable dispute could be nip in the bud. So that is one significant change. Then there are changes, section 16(5), which is basically, this was a demand from the trade that there have been cases where the input tax credit has not been taken within the stipulated time of, say for a particular financial year, the final return is to be filed till 30th November of next year. So if any invoice, ITC invoice pertaining to that financial year, the credit is not taken by the 30th November of next year, then that credit was not admissible as per the section 16(4) of the GST Act. So 16(5) takes care of that. That for 1718, 1819, 1920, 2021, this credit now can be allowed. Similar provision is section 128A, where the amnesty, as mentioned by Amish, certain show cause notices which have been issued pertaining to initial 3 years, there if the tax, the GST is paid, then the penalty and interest is not required to be paid. The last change I would like to mention is the section 74A. This is the new section being brought in. And from this financial year, that means April 1st, 2024, the section 70, earlier section 73 and 74, which are existing right now, they would not be operational. This section 74A would be required to be brought in for issuing any show cause notice, etc. And this section takes care of the one important thing that earlier when we used to audit, sometimes we used to invoke extended period even where there is no separation and no misdeclaration, just in order to cover the longer period of time. Now this new section makes for the separation as well as for the cases where there is no separation, the same period of 42 months is available. So that tendency to invoke extended period would no longer be there. So it's a major simplification. So these are the few changes I have mentioned. I think the faculty of the day would like to obviously take everybody through these changes in detail. With these few words, I wish today's webinar a grand success. All the best. Thank you very much for inviting me.
Thank you for all this. Writing us in a very lucid manner on the subject. Thank you again, sir. Now I would like to introduce Mr. Sushil Padar, who is the president of Confederation of West Bengal Trade Association. Mr. Sushil Padar is the national vice president of Federation of All India Vyapar Mandal, also the board member of National Traders Welfare Board, DPIIT. The motive, or rather goal, of Shri Padar is to provide opportunity by resolving the problems of trade community without any hassle in their business growth. Welcome, Shri Padar. A few words from you, sir.
Thank you. Good afternoon. As earlier mentioned by Sri Shravan Kumarji, Chief Commissioner, CGST here in Kolkata, that very good changes in indirect tax, that is GST, there are 2-3 major changes since the trade bodies demand since the inception of the GST, especially the revised return. That is a big relief came to the traders. And as mentioned by sir, that about the penalty and interest waived in the last this disputes and whatever the mistakes in initial period happened in 17, 18, 18, 19, 19, 20, there is a big relief to the traders. And the still when was discussing with sir that there are some minor issues that we may resolve for the traders, like error in e-way bill or error in writing on title number or this type of sometime it's come under law and come under act. So these things, major change is required for these things. So unnecessary, the genuine taxpayer should not be harassed. About the income tax also, direct tax also, as we all know, the state body demanding since last 8 to 9 months, that is about the 43 BH. It is a major hurdles to the traders. Traders is now in dilemma. They are not sure whether they are included in this thing or not. So, as last when Honorary Revenue Secretary was in Kolkata, then I mentioned this thing also that if at all it is introduced, then let it be for all. Let it be for all. All businessmen must be included. Like if a trader is supplying the product to anyone, whether he is MSME registered or whether he is not MSME registered, so he must get the payment within the 45 days period. At present, what is happening? Even a MSME registered trader, he is not liable to under this act that he will not get the payment within 45 days. So what is my suggestion? If at all government wants that is 43 BH must be continued, then government should issue the circular that all the person will get involved. But as far as my knowledge, when I spoke to the MSME department is saying that section 15 of the MSME Act is saying that MSME, all the traders will be not included under this act. So this a clear cut we want from the department, and otherwise about GST really we got the lot of relief. And for registration, also I mentioned to the sir that there are some little bit problems. Sir said, yeah, really, very soon we will call a meeting and resolve these things. So this is from my side. Thank you very much.
Thank you, Mr. Kodha, for your views. Now for the presentation, I would like to introduce Mr. Vikas Parak, who is the co-chairman Taxation Committee, Bharat Chamber of Commerce. Shri Vikas has an experience of over 20 years in the areas of audit, law, taxation. He specializes in GST, corporate restructuring, real estate project consultancy, internal audits, and process audits. He is also an IBBI registered valuer and conducts valuation for securities and financial assets. He is associated with several professional associations and business chambers. He has delivered presentations at various forums and has contributed several articles for various journals and magazines of professional associations. Welcome again, Mr. Parak, and you can please go ahead with your presentation.
Thank you. Respected Shri Shravan Kumarji, Chief Commissioner of CGST and Customs, Kolkata Zone, Shri Amish Kumar Gupta ji, Additional Director General, DGTS CBIC, Shri Ravindra Joshi ji, Additional Director, DGTS CBIC, Shri Sushil Kumar Poddar ji, President, Confederation of West Bengal Trade Association. Ladies and gentlemen, at the outset, I would like to thank DGTS CBIC for providing me an opportunity to share my views on the recent changes on indirect taxes. So without any further delay, I would just immediately start with my presentation. Ravindraji, I have how much time? Like 30-35 minutes?
Yes, please go ahead, not an issue.
Okay, thank you. I hope the presentation is visible to everyone.
Yes, it is.
Yeah, thank you. So basically, as we all know that any changes and to be done in the budget as far as GST is concerned, it has to come through the GST Council recommendations. And in the last meeting, which was held in June 2024, there were a lot of recommendations made as far as GST changes are concerned, where you need to take the approval through the which the amendment has to be done in the legislature, and it has to be done through the finance bill. So what today we will be covering the key changes which are proposed in GST and customs in the budget 2024, and apart from that, other recent changes in GST which were also part of the same GST Council meeting, which recommended the changes which have been done in this budget. And time permitting, we will take up any questions towards the end. So this is just a disclaimer. Let's start with some economic indicators in the budget. Fiscal deficit target 4.9% of GDP has been estimated, revised estimate for 24-25, and in fact the government has estimated that it will come down to 4.5 in the next year thereafter. Some policy updates. The focus has been on employment, skilling, MSMEs, and women empowerment. These were some key areas. Some of the important reforms, if you see, then a lot of industrial training institutes upgradation will be done. Women empowerment has been the focus, where stamp duty benefits on property purchased by women will be given, allocation of a lot of funds for scheme benefit women and girls. As far as MSME is concerned, as Sushilji was speaking about MSMEs, the loan of Mudra loans, the limit of Mudra loans has been enhanced from 10 lakh to 20 lakhs. Trade guarantee schemes in the manufacturing sector, some new developments are there. Well, one major important thing I would like to highlight here is some employment linked incentives. A lot of employment linked incentives have also been given by the government wherever any new employee is inducted in the formal workforce, having a salary up to 1 lakh rupees per month, not more than that. Then the government will give a direct benefit transfer of up to 15,000 rupees in 3 installments to the entity which will be hiring these employees. So this is a very welcome move. And EPF benefit up to 3,000 per month will also be given. Apart from that, internship opportunities for youth in top 500 companies of India will also be given, where only 10% cost has to be borne by the companies and rest will be borne by the government. So these were certain reforms. Now we straight away move to the agenda for today's session, which is the changes in GST and customs duty. Very nicely summed up and briefed by Sri Shravan Kumar ji and Amish Gupta ji also, and Sushil Poddar ji also, about certain changes which have been proposed in GST and custom duties, and it is moreover mostly related to reducing litigations or clarifications kind of things, to ease the trade and facilitate better and smooth implementation of the GST laws and practice. So first we will move to the very important amendment, which is introduction of a section 128A. So for the financial years 17-18, 18-19, 19-20, 3 years, if any proceedings are continuing at any stage, whether it is at the show cause notice stage or it is under appeal or adjudication proceedings, whatever stage it is, if the notice has been issued under section 73, that is the non-fraud cases where the extended period is not invoked. In those cases, if the tax demand is paid by the appointed date, which will be probably 31st March 2025, then if the tax is paid, then entire interest and penalties will be waived. So no need to pay any interest or penalty if the tax is paid before the relevant date, that is likely to be 31st March 2025. But the notice or the proceedings should be under section 73. So if it is under section 74, which is the extended period invoking the fraud cases or those cases, then this scheme cannot be availed. So this is one thing. So there could be cases where, the taxpayers might have challenged that this notice cannot be issued under section 74. Maybe the extended period cannot be invoked where there is no suppression involved. If maybe the reclassification is done at the order of the higher courts or authorities and it comes again under section 73, then I believe then those cases also we can avail the benefit if it is within the time limit. And the only thing is that in cases where the interest and penalty for these years have already been paid by the taxpayers, there is no provision for refund. So this, I think, may be a bit harsh on the compliant taxpayers who, just to not to go into the dispute, have already paid the interests and penalties for notices or proceedings which were done under section 73. So they will not get any refund. So maybe in times to come, in recently, if the government can think about anything on these lines, it could be beneficial for such compliant taxpayers. So this was one of the important changes. We've moved to the next one. So the respected Chief Commissioner was speaking about the common time limits for notices and orders. So, presently there are a lot of disputes on account of whether the notice should have been issued under section 73, where it has been issued under section 74, because the department claimed many a times that there has been suppression or extended period of invocation is there. But the taxpayer always feels that there is no suppression and the notice should not be issued under section 74, and it was a case of maybe section 73. So, there were different time limits, section 73 and 74. So first, section 74A has been introduced, wherein there won't be any need to check whether the extended period is required to be invoked or not, whether there is any suppression or not, whether there has been any case of fraud or not. So these will not be required, and only single section 74A notice will be issued. This will be applicable from financial year 24-25. So till financial year 23-24, for the period till March 2024, the notice will be continue to be issued under 73 or 74 as the case may be. But from the period 1st April 2024 onwards, that is financial year 24-25 onwards, the notice will be issued under section 74A, irrespective of whether there is any need to check whether suppression was there or not. So what is the change in the time limit? Let's see that. See, up to financial year 23-24, the time limit for issue of show cause notice was, if it is a case of section 73, where extended period cannot be invoked, non-fraud cases, then the show cause notice can be issued 3 months before the expiry of 3 years from the due date of filing of return. So that means if the due date of return, let's say, is 31st of December for a particular year, that is after 9 months from the end of financial year, then in that case, 33 months from that due date is the time limit within which the notice should be issued. So that comes to around 41 months from the end of financial year. So as per the current provisions, up to financial year 23-24, a notice can be issued up to 41 months for the financial year, from the end of financial year, 41 months. So if you see that for the financial year up till 17, 18, 18, 19, 19, 20, no notice now can be issued under section 73 because this time limit has elapsed. And thus, section 128A has also been introduced for these years only. So now, if any notice can be issued for any of these years, then it can be issued only under section 74. You cannot issue under section 73 because the time limit is expired. So only the notices which have already been issued, for them, you can avail the benefit under 128A. But for section 74, the time limit is for issue of notices 6 months before the expiry of 5 years. That is 54 months from the due date of annual return, and that becomes 61 months from the end of financial year in which section 74 notice can be issued. So for any period till financial year 23-24, a show cause notice can be issued under section 74 where cases of suppression or fraud are there within 63 months from the end of financial year. So this is the outer time limit for issue of notice. And currently what section 74A has been introduced is that you have to issue the notice within 42 months from the due date of furnishing of annual return. So 9 months is the due date of furnishing of annual return from the financial year. So practically you can see that 51 months now is the due date for issue of notice under section 74A from the end of financial year. So what was earlier, there were two limits, 41 months, 63 months from the end of financial year in 73-74. Time period in between has been introduced, that is 51 months from the end of financial year for any notice to be issued from financial year 24-25 onwards. So this is a welcome move to reduce the litigation. Of course, in 73 cases, section 73 cases, the time limit goes up a bit, but at the same time, the lot of disputes will go down. Similarly, for issue of order, currently the time limit is within 3 years from the due date of annual return and within 5 years from the due date of annual return. So this was earlier what was happening is that the time limit for issue of order was fixed and SCN was issued based on the issue of order time limit. But now the order will have to be issued within 12 months from the date of issue of SCN, which can be further extended by 6 months. So the maximum period by which the order has to be issued is within 12 months from the issue of show cause notice. It cannot be go on till the 5 years from the due date. If the no-code notice has been issued earlier, within 12 months, it has to be, the order has to be issued, maximum extended by further 6 months. One more important change is that currently, if you want to avail the benefit of reduced penalty, then you have to pay the demand within 30 days from the date of show cause notice or order, as the case may be. Here, in 74A, this time limit has been extended to 60 days. This is also a very beneficial provision for the taxpayer, where they get 60 days to decide whether they want to litigate further or they want to avail the benefit of reduced penalty and pay the entire demand of tax and interest along with the reduced penalty within 60 days of the show cause notice or the order, as the case may be. One more thing, currently there is no threshold limit for issue of show cause notice, monetary limit. Now in the new section, if the tax demand is up to ₹1,000, then no show cause notice will be issued. Only for demands beyond ₹1,000, show cause notice will be issued. So this is a good move for common time limit, which has been brought in. Next, we move to another important amendment, as already Chief Commissioner Sir has already dwelled upon this, 16 subsection 5. It is a retrospective amendment, a retrospective insertion of section 16 subsection 5 with effect from 1st of July, inception of GST, where if any ITC for financial years 17-18 onwards till 2021 or July 17 till March 21 has been claimed in any GSTR 3B, which has been filed till November 2021, the same will be eligible to be claimed. So currently the provisions of 16.4 gives you a time of claiming ITC within September of the next year for earlier years, and currently since last few years after amendment, it is November of the current year. for the invoices of past year. So you only have a few months after the end of financial year within which you can claim this ITC. But for initial period, there were certain confusions among the SSEs. The people were not aware, so the ITC might have been claimed a bit later. So to reduce those disputes and to give the benefit to the taxpayers, government has brought in this provision that for 4 years till 2021, if you have claimed in 3B even with delay, but up to 30th November 21, the ITC is eligible. So this is another welcome change. Well, even in cases where ITC has been claimed for the period from the date of cancellation of someone's supplier's registration till the date of revocation, then also if after revocation the claim has been made within 30 days of the revocation of the registration of supplier, then that will be also be allowed irrespective of for which period it was. Section 140 has been amended, which allows availment of transitional credit for input services received by ISD. ISDs receive services where the services are divided in different multiple registrations which the taxpayer has. So it claims the credit in ISD and then divides it based on the turnover of the different multiple registrations which the taxpayer has. So there were cases where invoices were received prior to July 1st in case of input service distributors, and the transitional credit of the same was not allowed to them. So this amendment has been done to allow them that thing. Another very important amendment is section 31(3)(f), time period within which the invoice must be issued under reverse charge mechanism. So wherever you are availing any services from any unregistered person for certain services which are prescribed under reverse charge mechanism. Let's say transportation services where the supplier is not registered under GST, unregistered. There you have to pay 5% GST on the transportation charges. But since the transporter is unregistered, a self-invoice is required to be issued under section 31(3)(f). So similar is the case of maybe sponsorship cases or some other cases of security where the supplier is unregistered, security services. So currently there is no time limit of issuing this RCM invoice. The government will come up with rules where they will prescribe the time limit within which this should be issued. Another very important amendment is that if the invoice has been issued for RCM in any financial year, let's say the reverse charge payment was related to 2 years back, but the self-invoice for the same is issued in last financial year or current financial year, then based on that invoice, the credit can also be claimed currently. So this is also a very welcome move and will benefit SSEs to a large extent where they have not been able to raise invoices or pay RCM in cases of unregistered suppliers where RCM is applicable. Well, extra neutral alcohol has been removed from excluded from the purview of section 9. Specifically, this is a specific kind of thing which has been brought in to keep it outside the purview of GST. Normal alcohol is already outside the purview of GST. Section 11A, very important provision which has been brought in. It allows the government to regularize any non-levy or short levy of GST where due to certain practices, several trades have several practical procedures or legacy procedures which they have been following since the past periods. And due to that common trade practices, maybe as per the GST law, some tax is not being paid or short paid across the board in the most of the SSEs in that industry or trade body. So government has now the power to regularize any such non-levy or short levy in case of any trade practices. In fact, if any of the industry or trade has any such case where they see there is an anomaly between the provisions and the regular trade practice, which has been followed practically, then maybe the trade body can represent this through appropriate forums to the government to proper instruction may be given under section 11A by the government now. Section 74, any credit taxes which are paid under section 74 on the basis of demand currently were not allowed. But now, post financial year 23-24, this won't be restricted, and if any tax demand has been paid under section 74, then there won't be any blockage of ITC, and this ITC will also be allowed as a credit. This is also a very tax-friendly measure as far as the taxpayers are concerned. Reduced pre-deposit for appeals. As per the current provisions, the time limit to pay the pre-deposit as far as the GST appellate tribunal is concerned is 20% of the demand, which is capped at rupees 50 crore each for CGST and SGST, or 50 crore for 50 crore each for CGST and SGST. So currently, if you go in the first appellate authority, which is the Commissioner Appeals, in that case you have to pay 10% of the demand. After that, as per the current provisions, the further 20% has to be paid when you have to file the appeal in appellate tribunal. That 20% has been reduced to 10%, and the maximum amount has also been reduced from the capping of 20 crores to from the capping of 50 crores to 20 crores each. So this is again a very good move where it will reduce the blockage of funds of the taxpayers and ease the financial burden on them. So where effectively it was 10 plus 20, it is now 10 plus 10, and the capping also has been till 20 crore rupees. Another amendment is that since the GST appellate tribunal currently is not functioning yet, and most of the appeals which have to be filed are pending to be filed, so government has made an amendment in section 112 and said that a 3-month period for filing appeals before the GST appellate tribunal will be starting from a notified date, providing ample time for the taxpayer. So the government will notify a date within which the taxpayers who need to file the appeal will have to file the appeal, or the department will have to file the appeal within the time period. The taxpayers will file within 3-month period. So if the period of due date of the filing of appeal falls after 3 months from notified date, then that date will be applicable. If it is less than that, still they will get 3 months from the notified date to file that appeal. Another very important amendment as far as the adjudication proceedings are concerned is section 70 has been amended. Currently, there was no provision in the law which allowed authorized representative of a taxpayer to appear on behalf of summoned person. Now, even the authorized representative of the taxpayer can appear on behalf of the person who has been summoned with a proper power issued to the concerned authorized representative. Well, some more changes in anti-profiteering. I'll not speak much about that because a sunset clause has been provided. 1st April 25 will be the last date for receipt of any new application regarding anti-profiteering, and all the clauses, all the cases for anti-profiteering will be handled by the principal bench of GST appellate tribunal henceforth. Now I'll move quickly to the other recent changes in GST which are there, which emanate from the same GST council meeting in which the budget changes were proposed. Monetary limits for appeals, a very important and very good move, that the department will not file appeals within the monetary limits of 20 lakhs for GST appellate tribunal, 1 crore for High Court and 2 crore for Supreme Court. So where the demand is only for tax and interest, then this tax, interest or penalty also, then this limit will be only for the tax demand. Where the demand is only for interest, let's say, and penalty, then it will be for interest and penalty in aggregate. So this monetary limit is for the department, where the department will not file appeal in these cases. Similar provision has been brought in, of course, with different limits under income tax as well. However, there one thing is which I would like to highlight is there in this circular which has been issued, there are several exclusions which has been mentioned, that in such exclusion cases, like if there is any matter which is ultra vires to act straight circular, or there is the matter involves interpretation of law regarding valuation, classification, refund, place of supply, or any other issue, or any other case in the opinion of board, if they feel that with so many exclusions, the department has got the right to file the appeal even if it is within these limits. So somewhere the list of exclusion is too vast, and it somewhere or the other, this provision is, the benefit of this provision to the taxpayer is watered down to an extent of those exclusions. So there's a large list of exclusions. So that has to be seen case to case, whether the case falls under those exclusions and whether the appeal can be filed within these monetary limits. So this is one thing. For existing appeals, where the appeal has already been filed, whether those appeals will be withdrawn or not, nothing has been specified so far. Maybe as we could see a clarification soon on the cases where the appeal has already been filed, which is falling within these limits. TCS rate has been reduced from 1% to 0.5%. TCS is being collected by the e-commerce operators on the suppliers who are making supplies through such e-commerce operators. Currently it is 1%, and it has been reduced to 0.5% to ease the financial burden on such suppliers, because most of the because the digital commerce and e-commerce is now growing fast, so the volume of business is increasing, which is through digital mode. So this will help such suppliers to a large extent in cases where they are supplying their goods through e-commerce operators, and the blockage of the funds will be reduced to a large extent. It has been halved practically. A very recent and very important change: value of services between domestic and foreign affiliates. Why it is important? Not only for just, I'll tell you, not only for foreign affiliates, it is also important for the domestic transactions between related parties. Currently, for any domestic transaction between related parties, value which is mentioned on the invoice is deemed to be the open market value if the recipient related party is eligible for full ITC. On similar lines, where the foreign affiliate is providing certain services to related domestic entity, suppose there is a foreign concern which is a related party, and the Indian entity is availing certain services from such foreign entity. So as per the current provisions, reverse charge GST is payable under reverse charge mechanism under import of services, as citing it as import of services. So currently there were issues regarding valuation, that what will be the value in such cases for such services. So it has been clarified that if the Indian entity is eligible for full input tax credit, then any services which are received by the Indian entity from the foreign entity, whatever invoice is raised by the foreign entity, that value can be deemed as the value and GST can be paid and credit can be claimed by the Indian entity. However, it is also mentioned that if no invoice is issued by the foreign affiliate, foreign entity to the Indian entity related party, then it will be deemed that the value is nil and no GST will be applicable. So this is also a very, very good move which will reduce a lot of litigations, not only in case of related party transactions between foreign associate and Indian entity, but also between domestic entities. In fact, in line with that, Rule 28.2 was amended with effect from 26th of October 2023, wherein it was mentioned that in cases where corporate guarantee is given, then the company giving corporate guarantee will have to charge GST on a value which is deemed to be 1% of the guarantee amount. So there was a lot of hue and cry in the industry regarding that, because a lot of small companies which were having properties were giving guarantees on behalf of their related party entities, which were large industries, and the guarantee amount was much high, but the properties which were held by these small entities was low, and many of them were not registered also. So due to this, they were required to register, they were required to pay upfront GST, which was a huge amount, and then this was the case. So the government has amended this Rule 28 retrospectively, clarifying that this will not be applicable, first of all, to export of services. If there is any export of service, then this rule will not be applicable. Secondly, if the recipient is eligible for full credit, then whatever is charged on the invoice by the by the company which is providing corporate guarantee will be deemed to be open market value, irrespective of whether it is 1% or not. So even if someone is charging 10,000 rupees for even of a corporate guarantee of 100 crores, then also if the recipient is eligible, that will be deemed to be the consideration for providing corporate guarantee. And another very good clarification has been provided, that where multiple entities are providing corporate guarantee to a single entity. So earlier there was a difficulty that every entity would have to pay GST on 1% of that same amount of corporate guarantee. So now a clarification has been provided that proportionate tax will be paid in case of multiple related entities provided corporate guarantee. So that, let's say there are 10 entities providing corporate guarantee single to a single entity, then it will be divided among those 10 entities and tax will be paid accordingly as applicable. Again, another move to reduce litigation. As you all are aware that section 15(3) subclause B provides that wherever any credit note is issued where GST has been reversed, there is one condition, that the input tax credit attributable to such reversal of discount, post-supply discount, has been reversed by the recipient. So what happens is that after supply or sale, if you are giving any post-supply discount, then based on certain conditions, the GST can be reversed by issue of credit note. But there is one condition, that input tax credit attributable to such discount on the credit note which has been issued has to be reversed by the recipient. So currently there was no mechanism as far as the taxpayer is concerned or the department is concerned to verify whether this ITC on the credit note has been reversed by the recipient or not. So a circular has been issued which provides that proportionate reversal of ITC has to be done by the recipient, but that will be certified if the amount of discount is not exceeding 5 lakh rupees. Then it will be a self-certificate from the recipient will have to be taken by the supplier. If it exceeds 5 lakhs, then a certificate duly certified by the chartered accountant or cost accountant certifying the reversal of ITC will have to be obtained from the recipient. So currently there was no mechanism, only maybe a corresponding debit note or a corresponding confirmation of account could have been obtained from the recipient. But this will be very useful in cases where, recipient has reversed the ITC and you have reversed your GST based on the credit note. So based on this declaration, you can very well avail and suffice your claim with the department. I'll not go much into the ESOP thing. One thing is place of supply in case of unregistered person. Circular has come that where if any goods are provided, goods are supplied to any unregistered person, where the billing address is different from the address of delivery of goods. Suppose there is any, mostly it happens in case of supplies through e-commerce platform like Amazon, Flipkart or anything through which you are delivering the goods. The goods are supposed delivered to the recipient who is unregistered and the recipient's address is in one state, and let's say the goods are delivered to another state. So circular says that place of supply will be the place of the delivery, place of address of the delivery of goods. So suppose you are billing to a person in Bengal who is an unregistered person, but the goods are being delivered to Haryana. So the place of supply will be Haryana. Now, one thing here is this, this is a bit contrary to section 10(1) CA of the IGST Act. There was a recent amendment in section 10(1) subclause CA, where it says that where the supply of goods is made to an unregistered person, then the location of the supplier where the address is mentioned on the invoice, the address of the recipient, the address of the person which is recorded in the invoice will be the place of supply. But in this circular, it is the address of delivery of goods. So the facts need to be looked into accordingly in such cases. Now, another clarification is where goods are, sent under warranty without charging of any additional consideration. Then in those cases, suppose if there is any goods which were delivered in originally, goods were delivered, there was some defect and it was under warranty. Another set of goods is delivered for such defective goods by the supplier, but no consideration is charged. So in those cases, no GST is required to be paid by such supplier and neither any ITC is required to be reversed for such goods which are replaced under warranty if any additional consideration is charged. So this is again a very important and welcome move by the government. I believe this is the last slide before the customs as far as GST is concerned. GSTR 4 due date has been extended from 30th April to 30th June. GSTR 1A, as Sushilji was speaking about, a revised return which he was speaking, it is form GSTR 1A has been introduced to allow taxpayers to declare any changes, any additions, modifications in the GSTR 1 which has been filed before the filing of 3B. So if you have filed your GSTR 1, let's say on 10th of a month, and your GSTR 3B you will be filing in on 19th of suppose that month. So within this period, if you have omitted anything to be mentioned in GSTR 1 or you need to modify anything, then you have GSTR 1A where you can do that and the effect will be taken in the GSTR 3B. So there won't be any mismatch between the original one and 3B because the GSTR 1A will subsume those changes as far as GSTR 3B matching is concerned. Again, for B2C supplies, interstate supplies, currently if there is any invoice which is exceeding rupees 2.5 lakh, the invoice wise reporting is required. This limit is reduced to rupees 1 lakh now. So any B2C interstate supply with an invoice value more than 1 lakh, you have to report invoice wise in the GSTR 1. Some changes in the registration procedure which are amended to counter the fake cases. Again, adjustment of amount paid through DRC3, again pre-deposit. Many people had paid through DRC3, the pre-deposit which is required to be paid for the appeal purposes. So a mechanism has been brought in and a new form DRC3A is being introduced for adjustment of the pre-deposit which has been paid through DRC3 cases. So now we move towards customs. So important amendments in custom. Section 28 DA amended. Chief Commissioner sir was speaking about this very valid issue which was happening with the many cases where you were importing goods and you were required to prove the proof of origin. But with the lot of changes being made in the trade agreements recently, FTAs and all by the government with several countries, a self-certification mechanism from the supplier of goods has also been brought in. This has been brought in. Section 65(1) proviso has been inserted to empower central government to specify certain manufacturing and other operations in a class of good that will not be permitted in the warehouse scheme. Then a lot of changes have been brought in time limits. Time limits of duty-free re-import of goods has been which are exported under warranty. Suppose you are importing under goods and exporting under warranty. Because these were under warranty, you have to do certain repairs and all. This has been extended from 3 years to 5 years, further extended by 2 years. Another, all goods which are imported by a unit or developer in SEZ was exempted from GST by notification on 15th of July. The finance bill in this budget has made this amendment effective retrospectively with effect from 1st of July 2017. So this is again a retrospective amendment which will help the units and developer in SEZ units. And certain rate rejigs, a lot of changes in the tariff has been brought in. These are the things you can see on the screen which have been, the rates have been reduced to, mostly encourage make in India, to encourage manufacturing in India. About mobile phone industry, chargers, gold, silver, platinum imports have been reduced. Raw materials for leather and textile exports. So these will be benefited. Then solar panel components, the government focuses on renewable, energy. So these are certain things which sectors for which the customs rate has been reduced, and certain things have become costly, which is mentioned there in line with the government policy. So these are the tariff. A lot of tariff changes actually have been brought in, and most of them are to help and encourage the Make in India concept. So that was all from my side, and I'll stop the presentation here and be happy to take any questions on the topic, if any. Thank you very much.
Thank you, Mr. Vikas, for such an exhaustive and lucid presentation, and I'm sure all of us have been benefited by it. Now, I would like to invite all the participants for questions, if any. Please ensure that question asked should be relevant to our today's topic, and further the questions can be asked using the chat box. Questions, if any, please. Uh,
I believe the presentation was clear enough for them to understand all the things. So
I also think so, Mr. Vikas. I think your presentation was with such clarity that people don't have any questions to ask. But still, we can have one wait for a few more seconds, if any, if people like to ask. I think Mr. Podar he has some urgent meeting to attend. So I'll go
Yes,
ahead with
sir.
the thing. I think people don't have any questions. With the permission of ADG, sir, can we, sir, go ahead? Sir. So I think it was a very good experience for all of us. In such a short span, we have been enriched with all the information on budget, the recent budget, key changes in proposed GST and customs. And credit goes to all the presenters as well as participants, without whom this webinar would not have been a success. To conclude, a sincere thank to Shri Shravan Kumar sir for taking out his time from his busy schedule to educate us on the topic and putting in efforts for making this session a success. Thank you so much, sir. We are also thankful to our ADG sir, Shri Amish Kumar Gupta sir, for his time and inputs. Thank you, sir. And now, on behalf of DGTS, Calcutta Zonal Unit and Delhi Zonal Unit, I take this opportunity to propose vote of thanks to those who have directly and indirectly contributed to this webinar on Budget 2024, key changes proposed in GST and customs, organized by our department. Also, our sincere thanks to Shri Podar for sharing his valuable experience and inputs. And special thanks to Mr. Parak for his presentation and speech that made us understand the topic very well and in such an easy manner. In the end, I would like to thank all the participants for their support and time and in making this webinar a success. Thank you, everyone. Thank you.